Welcome, everyone. Welcome to the Monday evening Hurley Investments Market View commentary for July 27th, 2020. It is truly a pleasure to be with you tonight. I need to apologize for last week. Thursday, I literally didn't get around to recording what I wanted to record, so I will go through some of that with you tonight. And needless to say, rough week for me parenting, rough week for me in the market, and I didn't handle it all that well. But plain and simple, last week our market had its first drop since June as tensions flared between the US and China. Because of that reason, last Thursday at like 1 o'clock Eastern Standard Time, around 11 o'clock Mountain Standard Time, probably closer to 10:30, I started getting more protection on and moved up, especially for some of those stocks that are going to be influenced by China. Apple, Visa, Disney, Baidu, Ford. I started to go ahead and get some extra protection on. And because of that, we started to be more protective for some of our positions. And all that went on last Thursday for the most part. Technology sector last week led the decliners, the drop of 1.5%. Energy was the gainers, which is a little interesting because we really didn't see it. Couple big hits was Intel last week, tumbled 15.7%. AT&T fell, yet Verizon did extremely well. As I was looking at some of what was happening, I got to the thought process of what will happen over the next 3 months. So I'm looking at August, September, October. What's going to go on? What would move our markets during those periods of time? If you'd like to go ahead and put a statement in or give your best educated guess, please do that. But I found myself wondering, is round 2 of COVID kicks up as problems with China? I instantly went to, okay, we're going to have 3 volatile months before the election. With that said, I did a little bit of research and I went to the market and ideas. I put the SPX in. I usually go to an advanced chart because I read it, the SPX was up something like 7%. As I did my calculations, I said, okay, I see the market opening on July 1st at 3106. And it closed today at 3239 minus 3239. So I see a growth of 133 divided by 3016. I see a 4.28% gain. Well, Kevin, maybe it was going from the close of 3100. Again, that's only 6 percentage points. And if I even added those in, we come out to a gain of about 4.35%. When I see a gain of 7%, all of a sudden I now understand that maybe they're taking a 30-day period of time and calling it the month to date. It's not accurate, which I scratch my head at Bloomberg and CNBC and I wonder what they're doing. When I started to think about the next 3 months, I thought we've seen this before. When did we see this before? When have we seen these things that are coming up? Tensions with China, problems with COVID. I mean, when have we seen this before? How about mid-February through March? When we think about how far we fell, oh my goodness. March 9th or February 20th, 3380, all the way down to the close of 2305. %35 decline. It came quickly. So, are we going to learn from the past market movements, right? My thinking is we can definitely, can't spell, drop 35% again because we've already done it. But we're in July, so July, June, May, April, we already did it. We've already done it 4 months ago. I'm not presenting to you doom and gloom, but there hasn't been any earnings forgiveness that I've seen. There just hasn't. As I think of a couple stocks that have done okay, I think of Microsoft. Microsoft beat on the top and bottom line. And what we were trying to say for you, earnings should have been good for Microsoft, but it was unsustainable to expect people to stay at home and continue to purchase. And I'm going to say this with one of those all due respect phrases, to purchase yearly, what's the word I'm trying to look for? Basic computer programs. Thinking about Office, right? I'm not sold on their cloud. I'm not sold on some of the other things they have going on because it doesn't show. So I expected good earnings, and my thought was it's unsustainable, so Microsoft's guidance is going to kill them. And that's exactly what it did. As I spoke with Keeve, and pardon him for taking over for me a week ago or a week and a half ago, I was just throwing information at him. If you looked at Microsoft on FinViz, that's all you had to see. is take a little generic look and see that their insider trading cleaned house. And their insider ownership went down from 4.38% to 1%. There was your tell on Microsoft. Insider ownership, insider transactions, clear as day. An unbelievably easy tell. That when it's down 4.28% of total shares, and currently sits at 0.01%. Huge sell-off. COVID-19, people are anxious to get back to work. I'm going to say throw their kids into school and resume their normal lives. There was nothing that I saw was that was sustainable for Microsoft. It was an unsustainable current growth trend, which we usually call a fad. Now on the flip side, but Kevin, haven't you seen Facebook taking a beating? And I'm going to say kind of, but I don't really call it a huge beating. In fact, I think they're weathering the political storms and their fake news and their advertising pretty well. We do have a tell. They sold off 60% of their insider shares. Only insider owned at 0.66%, down from 1.47. So it is a tell. But I like the reiteration. Kevin, they lost Disney. They did. It'll be interesting to see if they're punished for it. It'll be interesting to see if they still make their earnings per share. In fact, if I look at what Facebook is expected, let me tell you where I go to that. I just make a quick run to briefing. Briefing.com, earnings. I'm going to go to this week. I'm pretty sure it's Wednesday. Wednesday after the close. $1.37 on $17.3 billion. Comparably speaking, a year ago, they were $1.99. The bar has been lowered. The bar has been lowered by 33% for them. I'm not too worried about Facebook right now. Might I change my tune? Of course. I might really change my tune. I might kind of freak out if they get their butts kicked. But where the heck is Facebook? But the short answer is I'm still in for Facebook. They're still being used. I still like where they stand. So when I take all this information together, I worry about a day like today. On a day like today, I was down roughly 0.6%. Loser day on a 0.74. So it now becomes time for me to start to take a look and to see what's out of whack. Instead of just telling you, oh, don't worry, it's going to be okay, I have to look at my Apple numbers. Apple's up big. But you know what? I still have protective puts. Protective puts that are way in the money, that I'm not ready to take off. I am grateful to have 395 protective puts for Apple because of the China scare. I'm willing to risk to lose a profit that was over $10 because I need to protect $395 of a share price that's at $379, where some people think that we're going to have to back the truck up to $325. As I go down, I take a look and I continue to look. What has stood out that's killing me? Boeing. Son of a bee, Boeing. I really expected a little bigger jump today. We're still holding 170. Guess who's going to get protection tomorrow? Boeing. We're going to take and get some puts at the money and kind of go off to the races. Well, Kevin, you have puts right now, which we do. We have the 175, 160s. They're actually net profitable. No, they're not. There could be, never mind. Cost basis is 625. We might sell them for 765. They are net profitable, but we're probably going to be leaving those in place, if not just taking off the short puts. Yes, it's a big loser today, but I like the position we're in, and a lot of the losses are coming from a single leap call position that we have all the way out to January 22. Boeing's one of my big losers. I'm okay with my current positions and where they're at. As I went down, Baidu is my other big loser for the day. The big part of the loser is not the leaps. It is the protective put. Well, I took a look. It says my protective put should have made up $2.82 of a $3.16 movement. It's not there. The gains aren't equaling or adding up. So the interesting part on that one, once again, rather new to this year, the volatility gets out of whack, maybe because it's a global volatility. I know I've got some catch up coming to me in $123 puts that I currently have in place that shows it in one place, but it hasn't added up in the other. So, okay, I now see part of my day today is Baidu, but it's not completely out of whack. We just have some catch up that needs to be happening with their options. Disney down 14,000, took a quick peek at this one today. It's protective puts again. I've got 120s in place. They made up 80 cents of the 130. They should have made up 2/3, but again, once all the profits aren't in there. all the profits aren't there. I know this option will have some catch up that'll come to it the next day or two, where it'll be weird and you'll see a huge run up on the other side. As I went through, nothing else really stood out to me or made me worry. So with that said, I thought, okay, I'm good. I've got the majority of my shares protected. I'm going to be good to make it through earnings. Apple this week, Boeing this week, Disney not yet, Ford this week, Facebook this week, Eli Lilly this week, Under Armour this week, and Visa this week. Although Under Armour, I think, has changed. Let me take a quick look. Under Armour. Nope, it is the 31st. Yeah, it's the 31st, not the 28th. So, where our markets end this week, I'm going to say lower. And it'll be lower on big cap technology. The Dow has hardly moved this week or this month. The S&P is up 4.24%. I'm still sticking with, I think we're only going to be up 1.5% as big cap gets beat up. It's coming this week. We have tons of technology that's going to be coming up. All three are still bullish, but I think we're going to go back and test some 50-day simple moving averages. I'm sticking with where July will end at only up 1.5%. Haven't changed my mind off of that, and that would be my expectation. Huge amount of earnings again this week. I only put some of the most important ones in, but we're looking primarily big technology, which is my worry. Monday, Hasbro, 5F or F5 is there. Tuesday, 3M, Altria, Arch Coal, Cummings is there, DH Horton, JetBlue, McDonald's, MDC Holding Companies, Pfizer, Raytheon, Amgen, eBay, FireEye, Visa. Wednesday, Boston Scientific, CME, Garmin, GE, General Motors, Shopify, Vacation, which I think is Marriott, PayPal, Qualcomm, Boeing, Facebook. Thursday, ConocoPhillips, Crocs, DuPont, Grub. MasterCard, we have Coors, TAP. Coors is on. United Postal Service, so UPS is there. That's not United Postal Service. It's UPS. Valero, VMware, Yum Brands, Google on Thursday. SkyWest for Airlines on Thursday. Eli Lilly, Xsteel, Apple, Ford, Caterpillar on Friday, Dominion, ExxonMobil, Phillips 66, Merck, VF Company, Chevron, JCI. A lot can happen, and I think we're going to get a lot of mixed reviews. And again, I have yet to see a company that I can say, hey, we've got really good earnings forgiveness. Durable goods came in at 7.3 today versus the 6.4. If you take out transportation, 3.3 versus a 3.3. Consumer confidence will be big tomorrow, pending home sales on Wednesday with an FOMC rate decision. So Wednesday, our markets, the movements won't matter until roughly 2 o'clock Eastern Standard Time. Of course, they're not going to raise the rates, but you will expect them to make a comment on if they're doing all they can do and make a plea to the GDP to follow through with something to help them. We will most likely see tomorrow a plan presented by the Senate to the House, and they're going to have to compromise. You're going to have to compromise and get something passed. GDP is on Thursday, huge. Anyone know what the expectation for the GDP is? It's actually shown as a percentage of growth. Anyone know what the GDP expectation is or consensus is? If you don't, just type in a couple question marks. There go about 4 question marks. It's down a negative 35.0%. So normally you see like a 4% growth year over year, or a 3% growth. We're looking at a negative 35.0. Really watch Thursday, our markets take a tumble as retail traders don't get what's going on. Because I saw GDP in some of the big earnings, I did not look internationally. Before I post this, I will make a quick check and I will check internationally to see if there's anything that's coming up. I do have some very interesting articles here. And I just had 2 questions. I observed the number of contracts shared is the lowest since I followed. The number of puts shared are doubling calls. 70%, yes. Crystal ball, so yes, it's a tell, right? It's a sign, it's a tell that expectation is our markets are going to tumble. When you have out of the money, 71% of the puts are traded on a 0 to 0.2 delta, you're looking at people that are buying out of the money for a little portfolio hedge. And yes, it's shocking how few option contracts were traded today. It's been the lowest in like 17 years or something like that. But yes, that would be a tell. Here we have an interesting article. I'm pretty sure this was done by TD Ameritrade. I like where they're going with it, and this is my understanding and the reason why I am still in Boeing and have pushed some of our lead calls out for a profit. Very interesting article. But plain and simple here, very interesting article, but plain and simple. It all comes down to earnings seem improving, but comparisons or comps will be easy to beat. Why the optimism? I disagree with where they're at, but they do make the understanding that Boeing has a huge backlog and they should be doing just fine for the next year as soon as they get their approval for the 737 or for that system that also affects their 777. Stocks close flat as Netflix shares drop. Another great example of an earnings where there was no earnings forgiveness. Boy, they missed somewhat significantly, of course, but their subscriber growth was their key metric, and that just barely missed. Unbelievable how they got pounded on a subscriber miss that wasn't by much compared to how many subscribers they have. No earnings forgiveness. State Department ordered China to close a consulate in Houston. They got pissed off, and over the weekend, they ordered one of our consulates to close and one of their no-name states. I don't know how to say it, but we asked for a China consulate to close in Houston. They shut down one of ours. Here we are in the tit for tat fight with China yet again. This is a CNBC Prime where you got to pay 20 some odd dollars a month, but earnings could be a sell the news event for the mega cap tech stocks. Strategist says. Really, it looks that way for. Well, yes, they're correct right now. If you want to take Microsoft in there, Netflix in there, but really, most likely will be a sell for the S&P 500. That'll be the key drop that you're looking at. I found a hysterical article the world on a billionaire's budget. They use Joe Billionaire, and they're using the Gates and Bezos for some of this, but it's absolutely hilarious. Jeff Bezos increased wealth from 72.8 billion to 108 billion. I mean, holy crap, that's $36 billion, basically a 50% increase for him. A billionaire's household budget. A 4,000 expenditure for Joe Billionaire is the same as a fraction of income as $1 for the median earner. So every time Joe Billionaire spends $4,000, it's like us spending $1. It's funny because he calls it a Joe buck, right? If they shrink everything down, a $2,000 vacation is 50 cents for Mr. Joe Billionaire. The annual food budget is only $3. It's hilarious. It's just, you've got to go through some of this to see what's what it is respectably for how they compare with everyday people. It's just amazing to put it into perspective and see where all this money is going. Dow dropped 350 points as tech shares slide. This was last Wednesday. Again, I'm just making a warning and helping people understand why an Amazon, a Netflix, an Apple might be in some trouble. We're probably going to run protective puts all the way through and then add short calls after earnings. And believe it or not, I've never been a fan of day trading. But here in Heber City, about 30 miles away from us up in the mountains, another bugger got caught admitting to a $10 $10 million day trading fraud where he milked $10 million away from people. It's again, day trading is so short, you can never have a pattern that's what you want to see. And then I had the 20 Habits of Eventual Millionaires, just something to make you laugh, something that you might want to question yourself on. Can you say no? Are you loving, compassionate? Do you make mistakes? Do you plant seeds? Are you being around people who are kind to you and love you? Are you standing next to the smartest person in the room? No excuses. Do you take the blame for making mistakes? Are you not in a rush? Are you solve difficult gratitude problems? Warren Buffett's 5-20 rule. Make a list of 25 things, focus on the top 5, throw the other 20 out. I like this one, write down 10 ideas a day, follow up, ask questions, 1% a day. If you want to do better, do an extra 1%, and compounding yearly is 380% over a year that you win. I've told this to my boy. My boy had tryouts today for soccer. He got invited to the state national soccer tryouts where they pull their Olympic players. 1 of 400. He had 2 not so good practices the 2 previous Mondays, and this Monday was his best practice. And the difference is each day he took a little extra time from what his club team tells him to do. He did just a little extra. He had his best practice yet. He will probably not make the Tosh national team for soccer this year, but he now has an understanding of what to expect and how to be prepared for it next year. Right now, get things done. Sleep. This is the one that I suck out. Plain and simple. Last night, my back was hurting. Working on a bit of I think it's a slip disc. I'm being informed it might be a herniated disc. But get enough sleep. Every day avoid death, and do one thing every day you loved as a kid. The funny thing is you thought they were 20. The secret of success is sometimes getting it wrong or adjusting to what you have happening in front of you. Guys, what questions do you have? What questions did I miss for you from last week? but plain and simple, we're protecting for earnings. We're getting ready for a very volatile week where 7 of the stocks in our portfolio, main portfolio, 12 or 14 are reporting. So it's going to be a market moving week for Hurley Investments. What questions can I answer for you that maybe you haven't been answered? So, good question. So the comment was, what trade did you do on Facebook? We haven't done a trade on Facebook yet. We're most likely going to suggest some type of leap calls. I'm looking to get through this next 3 months, and I'd like the ability to dollar cost average. Well, Kevin, why don't you just wait till it goes down? Again, I could be wrong. What if Facebook doesn't go down? So I want the ability to be in it. I would most likely do a leap long call on Facebook, whereas if I'm wrong, I'm still going to have upside potential. And if I'm right and it does go down, I'm not going to blow my wad all at once. I'm going to put in about a 25% of the position that's in and have the expectation dollar cost average it once, if not twice. So good question there, Lance. No trade was done last week, but we're going to talk about it tomorrow. It's going to be a Facebook leap call, probably something cheap where I can go out of the money, and my plan is the dollar cost average it once, if not twice. And that's why I would have went for Facebook over Microsoft. Eva and I just had a little bit of time to go over everything, but that's the reason why I was liking Facebook over Microsoft when Keeve did a trade finding and adjustment, I think a week and a half ago. Did you cover the issue on Under Armour with the SEC? I haven't yet. In fact, in all honesty, I'm going to wait for that comment until after we see their earnings come out and see what they admit to us versus what's reported. Abraham, how do you see the fact that 5 to 6 stocks lead the whole NASDAQ? Implications? Yes, the short answer is when you look at the NASDAQ or the NASDAQ composite that is weighted, we have Amazon, Google, Apple, Microsoft. Oh, God. There are literally 5, I think 5 to 8. I don't know them all. Netflix is in there, Nvidia's in there, but they're basically 8 stocks that are moving 68% of the NASDAQ on a weighted average. So expect volatility. Someone has already tried to tell me, well, our market probably isn't going to go down another 30% or 35%. And I would agree. But it did do that before, so that has to be your premise or what you're looking at. As I took a peek and I'd look back again on the S&P, yes, in all honesty, I don't think it's going to go down 35%. But as I look at the S&P 500, I look at where our pivot points are going to be and past pivot points. I'm most likely expecting it, and it wouldn't surprise me to see it go down to somewhere in that 2650 range to 2750 range. That's just our past history. Kevin, the pivot point though says today 2832. But I'm probably going to go back to a more relevant pivot point, which could be the 2700 or the 2600. I'm going to split the difference and say that 2650 to 2700. Yes, I know we will probably not go down another 35%. But the funniest thing that I hear from people, oh, I put this trade on, I made a mistake, and I learned from it. Again, my favorite word when I hear that usually starts with a bull and ends with a shit, right? You don't learn. No one learns from doing stupid mistakes on trade. They justify why they're going to break the rule next time. I would be foolish not to look at our past history 4 months ago and think it can't happen again. That is the epitome of stupidity. So, for all those people that are out there that say, you know, hey, probably not going to happen, not worried about it, not doing this, not doing that, there's a great example of, again, someone's going to tell you they're going to learn from their mistakes in the market, and they don't learn jack squat. So I'm going to be prepared for it. We're going to go full collar trades. We're going to go covered calls. I'm going to look for levels of support to add maybe ahead of time this time some long puts, because I've already seen it once, and I've got areas of reference to be able to take advantage of it the next time going through. A lot of people have made the comment, well, could you have done better taking advantage of it at the beginning of the year? And of course we could have. With that said, we did not do bad, except for some Boeing holders. And more importantly, to be 100% honest with you, it's like number 39 or 42 of first things that have happened that we haven't dealt with since the Second World War. What do you mean we haven't dealt with a pandemic? We just had one 2 years ago. Yeah, we had a stealth one that nobody knew, including the world. So plain and simple, COVID-19, the first pandemic I can think of in forever. And because of that, plain and simple, I'm going to learn from it. I'm going to be better prepared for the next turn. And the next turn, understand, usually October is the worst month out of the year. September is the third month, worst month in the year. And I'm pretty sure it's February that's in between those two is the second worst. So if you know, what is it? 2 of the top 3 worst months are coming up for September and October. For crying out loud, use past history to your advantage. Good question there. So all that came out of, hey, have you put on the Facebook trade yet? No, we have not. We'll go over it tomorrow. Okay, anything else that I can answer for you? Make sure I haven't missed any questions. Looks like I'm looking good. Guys, have a wonderful evening. Pleasure being back with you. Thank you for giving me the leeway last week. Again, I hope you do go back and listen to Tuesday nights. If you ever want to see, get a good laugh, if you ever want to kind of chuckle a little bit, this is where you're looking at. Quick question came in. Past history on Boeing and Disney. Great questions. Thank you, Jeff. So as we take a quick peek, Boeing we now can get down to what, $96. Kevin, you show 89. I'm going to go with 96, 97, 98. Those are more of the lows. So as I'm looking at Boeing, if they have a bad earnings, it most definitely can go hit 140.50. It has 120 on the downside. It has 96 below that. If they make any kind of discouraging comment that the FDA is still 4 to 12 weeks out, we're going to go test at least 120. So bad earnings gets down to 140. I'm going to be adding more puts on it. Might even add some cheap ones out at 120 to make a little extra money, seeing as where they've gone in the past. I thought it was 96, which stood out as the low to me. Looks like they have gone down at least intraday to 89, but 96 is the low end where I'd start to cash stuff in and put it back up. Disney, plain and simple, where they're trading at the 116. Earnings will be very interesting for them. Plain and simple, 100 is the first drop on the way down, and 92 is the next drop. So if they don't have good comments, if they don't say they're opening up their California park, it's that understanding of where things are going to go that give me a leg up on where to add puts on the way down, and give me a level of comfort where to add short calls as well. Puts are expensive, correct? They are not so expensive right now. They are getting cheaper, and I guess expensive is all a relative term. But right now we're on the low end at 24. It would be better if the VIX was down at obviously 13, probably 15. But yes, there are some stocks that have expensive puts in place. That is because of their cost basis. And the question is, fine line between profits and protection. They're significantly different. You can have a long put on, especially on something like Boeing, where we have our 175s on. 175 on Boeing is huge, protecting it down to 96, where the cost might be relatively expensive to the stock. So our cost was almost $12, which is in that 7.5% range, 7% range. But we shorted some puts for 560. We could take those off tomorrow and pick up hopefully about $4 to lower the cost basis of these puts closer to $7, maybe $8 actually. So plain and simple, yes, the puts might be expensive. The stock has to move at least $12 till they're guaranteed a profit. But I'd rather spend $12 and lose all the $12 than have the stock at 175 and lose $75, if not $99, down to the $96 mark. I guess that's $79. So there's a big difference in a comparison there. But yes, put profits are significantly different and less important than protection on a $175 stock. And the good news is puts are significantly less expensive than they were 2 weeks ago. 2 weeks ago when the VIX was closer to 40. Any other questions that you guys have? Good questions, by the way. Let me give you guys about 30 seconds. Family issues last week. I've got a boy that's 18 years old but still has 1 year left in school. And man, that kid is chomping at the bit to get out of the house. Abraham, I do not play soccer. I was a football player in college. Made it to both teams for BYU for football, Cal State Fullerton for baseball. I was not good enough to ever dress. I was just a body bag, or say you're on the team and you're just a workhorse. High school, you could add volleyball, wrestling, and track into those sports. Always been kind of a sports nut, and it's nice. I love seeing my kids compete. I love seeing them deal with losing. I hate participation trophies. What a load of crock that is. But what a neat opportunity to see your kids grow as they compete. And man, I'm a loud cheerleader is all I'm going to say. A very loud cheerleader for my kids. Any other questions? If not, guys, have a wonderful evening. I will look forward to being with you tomorrow night. I will get this posted tonight. And guys, pleasure to be back. Again, let me offer my sincere apologies for going off. I'm just pissed off at how big money sucks people in, and their whole game is just to capture the funds, not to give a rip about making people money. That never sits well with me. And that's what really bothers me about the big guys, is that not a chance that they look at your accounts once a quarter, if not even once a year. And I think you guys deserve more. Funds that are full of crap, again, I'm going to point them out over and over and over again so that you guys know. Appreciate your time. Have a great evening. I'll see you guys tomorrow. Good night.